Hey, good morning. Let's go over today's trade plan. So the main catalyst today is the FOMC announcement at 1 p.m. Central, and typically we'll see a relatively balanced market, a two-sided market heading into the FOMC announcement, and then following the announcement we can get a directional move. So the way that the market is set up right now, as long as we can hold above 29.75 to 31.75, which is marked as the micro bull bear zone, buyers can still maintain short-term control, and we can head higher towards the 36, 36.75. We have a naked VPOC at 40 quarter, and then an open gap at 43 quarter. So as long as we hold the micro bull bear zone, these upside objectives would be in play, and even a pullback to 26 to 28 could technically still leave buyers in control as long as we don't really get any break of 26 to 28. Now, bigger picture, we know that we're simply within a large balance area and trading range. So short term, we're using this as a bull bear zone, but bigger picture, even 17.5 to 19.5 is a spot where responsive buyers can enter the market. But this is really not going to be in play until the FOMC announcement. In the first few hours heading into it, the expectation is for the market to, for the most part, remain stuck within a range. Since we balanced for quite a bit around the 34s, we could still get a move up to this 39.41 initial resistance ahead of the announcement, and then we start balancing, or we could go lower to find buyers yet again, and then return back up to 34. But the overall idea is that we are going to stay within this, micro bull bear zone to initial resistance type range heading into the announcement, and then we can get a directional move. And if it happens to be an upside reaction, then we could go up and test the all-time high at 47.5 and potentially even take it out. If it happens to be a downside response to the announcement, then we could quite easily go down to 22.75, 17.5 to 19.5, and then if this zone breaks, we could even test lower towards the 06.75 to 09 quarter, which would be a pretty decent sized move down. And at that point, we can get buyers active in this market again and get a push back up. Because the overall context is still bullish, and because we're still within that bigger picture uptrend, any downside moves are probably still going to have those reactions at the zones where we still get those buy responses. Even if the market is going to head lower, the first test of the zone is probably still going to attract responsive buyers. Anyone who's short the market is going to be looking to cover into these support zones below and take some profit. And anyone who's still bullish on the market and wants to either add to their position or at least get involved on the long side, will probably be looking to buy at these support areas. So the net effect is that there's an expectation of more buying pressure as we test the support zones below. So the overall context is still bullish. Short term, if we hold 29.75 to 31.75, we would still be bullish. So as long as we hold this area, and worst case 26 to 28, but ideally we hold above the micro bull bear zone, and that would open the door for an upside move. And holding below 29.75 would be a red flag for buyers. And if we continue to hold below it following the Fed announcement, then it would open the door for a downside reaction, bringing the 17.5 to 19.5 into play, very likely, and with potential to even test lower and find buyers and then return back into the 17.5 to 19.5 and potentially higher. So that is the main idea for the Fed announcement. The price action, following the Fed announcement can be pretty erratic. So, manage your risk accordingly. Perhaps reduce your size, use a slightly wider stop, and only really get involved where you still have decent reward to risk, right? So that if you're using a slightly wider stop, the profit potential on the trade justifies that stop, right? That it's not just a wide stop for the sake of avoiding the noise, but it actually has good reward to risk as well. And that will keep you out of some of the lower quality trade setups and it'll only really get you involved at the ideal trade location, where you really have good reward to risk, and the odds are stacked in your favor. And if that means missing the trade, that's okay, because again, the price action can be very two-sided following the Fed announcement, and it can be a difficult and risky trade. So just keep that in mind, be patient, and just manage your risk accordingly. So those are the main thoughts heading into the day. Off the open, we're still favoring the buy side a bit more. Even if we get a little pullback, that's okay. But so far, the market is maintaining that bullish tilt, and as long as we hold above this 29.75 to 31.75, I think that will continue to be the case. But ideally, if we're going to head higher ahead of the announcement, we hold above 34 and then go up and test 39.41 and perhaps then start balancing in a range. So that's the idea off the open. Let's see how well the buyers are able to hold it up this morning, and we'll take it from there.